All right, I'm Danielle Michel. I'm the CPA and CEO of Checkmate Tax Advisors. I'm here today with John Hyre. He's an industry leader in tax advisory. He is a principal in our firm. He is a super genius when it comes to tax planning. And if you don't know him, definitely want to follow him because he is a teacher as well and is always putting out incredible content. So thank you, John, for coming to have this conversation with me today.
Very glad to be here. Anything we can do to help people keep what belongs to them and away from the imperial city over there between Maryland and Virginia, I'm on board.
I'm for it too. So that's the game that we're in. So we're here to level out the playing field. So changing what we call a tax season into a tax conversation. So you always hear the term quite frequently about the 1%, right? The 1% is this elite group, whether it's individuals that are known to be usually like mega billionaires or connected individuals that just have access to the right resources and strategies and people where they have this well-known strategies that are not accessible to the rest of the population. So what do the 1% know that the 99% don't know? And that's something that we're trying to work on here together at Checkmate and training our team and help level out the playing field so that the 99% ratio changes, right? And so what is your experience, would you say, with some examples from just, what are you, almost 30 years in now, right? Almost 30 years.
Just shy, we're almost there.
Year 29 in of practice, and you've been through litigating, you've represented all different types of cases and scenarios, and you've dealt with some of the most extreme challenges and also told people when to stop and not do things as well, which is extremely important. So from your experience, what would you say about just some scenarios, maybe a specific example or from a high level of how you've been able to bring that light to these individuals and people that didn't have access to that knowledge base or strategy planning or expert advice?
It involves insane curiosity. The top 1%, first of all, they do everything you Google. So the Augusta rule, paying their kids, they do all of this on steroids, done properly, because as you know, there are rules, and if you don't do it the right way, it doesn't work. You might as well not do it. Mm-hmm. So first, they implement the normal stuff properly, usually in a large fashion. But they also have custom bespoke strategies. They have curious, geeky, specialized people who hunt for ideas. Mm-hmm. And it requires time and curiosity. And because of the scale of the 1%, if you think about what a savings of, let's say we cut their taxes by 10%, to them that's a huge number. How much research will that fund? A lot. Mm-hmm. How much curiosity will that fund? A lot. And that's where it's at. You hunt for these ideas. For example, Peter Thiel, how he took and put $2,000 into a Roth IRA, grew it into a $5 billion thing. There was curiosity. There was research involved in how he did that. And by the way, you wouldn't get away with that today. He was so far ahead of his time in terms of what he did in terms of buying PayPal with his Roth IRA. Mm-hmm. The IRS did audit it. They didn't know what to do with it. They're much more educated today, partly because of that. Mm-hmm. But there are still that cutting edge frontier. So what's an example? I had one gentleman who's extremely pleased with me. He had a Roth IRA. He had about $20,000 in it. He found an insane land deal. And there are details. There are some details I can't get into involved with why it worked with this land deal and might not with others. So there's always a conversation. There's an ongoing conversation. What are you doing? What are you thinking? What is a low probability thing that you might do, but I need to know about it, and then let me know later as the probability that you'll actually do it increase. So there's an ongoing conversation constantly. And given what they pay, they don't come to me, I come to them. We're proactive, we reach out. So having conversations back and forth, started looking at a situation, very entrepreneurial guy, so not detail oriented, very visionary. So I had to hone in on the details, but we figured out there was a land assembly deal. So kind of like Disney, when they wanted to buy all this land, they didn't tell everyone or they'd have been charged a bunch. If I better edit that one, a bunch. And he was doing something similar. Well, we found one piece of land because of its location that was ideal. What we did is we took his Roth IRA, took it from $20,000. He was able to contribute in 1 year $2 million. Now, am I going to walk through how you do that?
And what are the general limits on a traditional investment for an IRA? Like traditional, if you didn't know.
$7,000 a year is the normal limit for normie, non-1% people. Mm-hmm. Is there a way to contribute a whole lot more? And you would only do this, given the mechanics and so on, you would only do this on a very lucrative deal. Well, when you're looking to acquire something for $2 million that you think is going to 10x, and I'm telling you, you have to be pretty sure. There are some risks here if it doesn't do this, and he's pretty darn sure. And so if you look at the math of what he paid us to structure it and make it happen, and by the way, this is a fairly, we can talk about, this is aggressive but not ridiculous. I'm very comfortable writing an opinion letter. I think he has much better than a 50% chance if it ever goes to court. This was an idea I heard about in '02, and I thought it was too aggressive at the time. But then over the years, some case law, not directly on point, but just surrounding peripheral law, that started to fill in the pieces of the jigsaw puzzle for me. So this was an ongoing thing that probably about 4 years ago, I said, I'm going to start looking for someone who knows they have a really sweet, really large, high multiple deal that they would love to legitimately. I'm not talking about, I have a license and I have my freedom and I want to keep both. So we're aggressive, but we also sometimes restrain people from hurting themselves. In this case, it was just looking for the guy who had a sweet deal, had the outside cash that he could put it and make this contribution to the Roth IRA over the norm, and how to structure it. And just chit-chatting, I discovered, again, because that's the communication. If I hadn't have known he had this deal out there, we never could have done it. But if it goes 10x, let's do the math. 2 mil times 10, so let's say 18 mil profit. We charged a tiny fraction of that to structure this. And the only reason I knew it is I talked to one guy who happened to found a custodian 20 years ago, and I remembered the idea. At the time, I thought it was a bit out there, and I just kept following it. And as the case law filled in the jigsaw puzzle, not all the way, that's why there's still some gray, and we're fine with that. There are shades of gray. We can get into that discussion. That's another thing, though, because the top 1%, they manage risk. They are not, if there's not, so the most conservative accountants will say, if I don't see 20 cases saying you can do this, we're not going to do it. As a lawyer, my attitude is much more, if it's not prohibited, openly, clearly prohibited, then we're going to assess the probability of how gray is this? And if it's good gray, we're going to do it. That's very much how the advisors for the top 1% work, very much. They are in the gray. They're willing to be aggressive. Once you explain what's the upside, what's the downside, always the key question, will you defend this? Will you sign your name on the tax court filing? Will you give me, and then we agree on a percentage. It could be anywhere from typically a 30% to a 70% is the usual range of gray that we deal in. As you get past 70%, it's not all that gray for me. And if it's below, let's say 30%, I get some heebie-jeebies going in terms of risk tolerance. This one I think is about a 65, 70%er. It's almost into the gray where I wouldn't even bother.
And that's a significant outcome for savings and being able to increase.
It's life-changing.
Life-changing.
18 mil tax-free.
Fundamentally changing.
And they're just constant. Sometimes we hit second, ground balls, second base. This is, of course, a home run. But it's that conversation, it's the thinking creatively, it's the constant research. And sometimes the client comes up with ideas. If we have a really good conversation, and they have to have some tolerance. The IRS is 101 years old. So how does it work? They make a law, entrepreneurs find a way to skirt it. IRS proposes a new law, Congress writes the law. It's not well written. We find another way to go around it. And this just continues, this cycle, until after a while, some laws are pretty tight at this point. And that's why the code is so huge and random and amorphous. But all that writing unintentionally creates opportunities. There are so many gray spaces that Congress did not intend. But the tax court looks at it and says, well, did Congress write it this way or not? That's all we care about. What does the law say? And the IRS has come back before and said, well, that was not the intent. And we have case law saying we don't really care.
And that's what's different too, is following that case law. Because I know you're a huge advocate on that, is making sure you're up to date with all subject matter case law. And that's where a lot of people fall off. So from a legal standpoint, and then from a tax strategy standpoint, it's not a fine line. There's some areas too that crosses where you have tax strategy from a legal standpoint and you have tax strategy from an accounting standpoint. And some of that world mixes together. What's so different is that traditionally tax preparers and tax strategists are are providing information more on an archaeologist basis, meaning like they're looking at past data, looking at historical information. And that's the way the industry is working right now. So where you hear a lot of frustration from individuals when like us as professionals speak to clients or potential clients or just other people at events, is we hear all the time is just, why didn't my accountant bring this to me, or why didn't my tax person bring this to me? And what you find a lot is they're generally using a tax preparer and not a tax strategist, and they don't understand the difference or the value. And not until you hear conversations like this, which is just the tip of the iceberg of a conversation. We're not going into any subject matter. We're just talking about industry in general today. But once that Pandora box is open, you'll realize that there's so much more like what we're talking about with these areas that are not defined clearly in the tax law. So it's hard to find a strategist that wants to be on board with this whole journey if you're willing to go down it yourself, because this is a relationship. This is not just us telling you as a dictatorship, as an advisor, saying this is what you should do. This has to be something that you want to do and we want to do with you, right? It's something that we feel comfortable with within our ranges, makes sense. The strategy is something that we can provide value with to our clients. But again, it's more on a proactive basis. So the more time that we can plan for events, the better. And it's a conversation. It's not a let's tax plan once a year with you and we'll talk to you at the end of the year to collect your documents. No, like as you think about events before you even actually execute events, those are conversations that you should be having with your strategist. But if you're paying $300 for your traditional tax preparer, that's like your family's friend's father or whatever it is, which I hear all the time, there's some kind of like wild loyalty to like CPAs and tax accountants. It's like once you're with them, like it's like the mafia. You can't get out. Have you experienced that too? It's just like it's been my accountant for 30 years. They do my entire family, all my cousins and all of our businesses. And the thing is you're paying them $500. You should be happy. You're getting $500 worth of service. That's what you're paying for. So the value is different, right? Like in the perception. So when you get frustrated with them, you have to actually take a look back and say like, what is actually the agreement between us? Like, and if that's not clear, that conversation should be had with that individual that you're using and now upset with for not being your advisor, but maybe they truly aren't an advisor at all. They're truly just a tax preparer. They do compliance work. They put numbers into a software and they produce a tax return. They input data and they produce out a result. And that's completely different from what we're talking about. When we talk about the 1%, like and focusing on these deep level strategies and challenging the tax code by following these case studies and finding out what the latest strategies that we can bring to the table and brainstorm with our team, to find those individuals that are motivated is a rarity, like in these very specialized matters, because it's not something that is black and white for us to even understand, right? So it takes a lot of, like we were talking about an example prior, and I remember you saying like just casually when we were speaking about it took almost 2 years to develop this plan before you could actually bring it to fruition. And the importance of that, of having that plan where now I have the plan, but to get to that point, to develop those strategies, to be able to make those moves ahead of time so that when it's time to execute or make those decisions, there's a whole premeditated intentional strategy that's going along with that. And finding a strategist to go along the ride with you is challenging because a lot of people in the industry are just so busy with the mundane busy work to just get those deadlines and compliances in. And that's where I definitely think that, we get along in that playing field of you being a principal with Checkmate Tax Advisors and being part of the firm and training our staff. And the way that we hire our staff is super important too. It's like, the people is the most important value internally, and externally, the people are the most important value to us as well, like our clients, right? To be able to provide value on a continuous basis, not just give them as a solution, which is just like a tax return answer. Like we want to bring things to them, and that's the difference, right? Like we don't want you to come to us and be like, I found about this strategy from a webinar. Like, why didn't you ever have this conversation with me? And then that's that level of pent up frustration with who you think is an advisor. Again, whether they are or not is another conversation. But the staff, the way that we've been working together to develop the strategies internally and train our staff to understand the knowledge base, like doing the what we're about to do right after this. We're doing a live breakdown with an individual so that we can walk through strategy planning and just how that works from just live events, and how we research is completely different than how we analyze when we do discovery meetings, right? So that's something I think that you do a really impressive job at, for sure, is being able to just be in those live events quick without needing to do that premeditated research, because you've been doing it for the past 30 years. Yeah. That's why it's you only see, the 10-minute conversation that they have with us or with you, right? But there's all those years of creativity where you've pushed the envelope, you've gone before, you've questioned things, you've said no to things, and all of that. So what are some examples of, without giving like specific names or anything like that, but if you have something that you could tell us of something that didn't make you feel comfortable, that was too gray for you, or something that may have been prevalent maybe 3 years ago that isn't something that now today you feel differently about because of case law or times that have changed.
There's one called monetized installment sales, and it's complex. It's hard to explain. I mean, if you Google it, it'll be a little bit painful. I started with, this is not going to happen. Because I'm constantly reevaluating ideas and watching for development. So there's this idea of you sell on an installment sale. What does that mean? I have a business, I sell it for payments, and therefore my tax is deferred. So they would sell on a 30-year balloon. They were getting paid 30 years later. So if they're not getting paid until 30 years later, there's no tax until 30 years later. Well, but then they were borrowing against the loan. So I sell a business to you, and I say, you don't have to pay me for 30 years. And so I don't get taxed in 30 years. There's some law that's badly written that says if I have an asset now. You owe me money in 30 years, and you're paying me interest every year. That's an asset. I can borrow against that. There's a code section that says if you borrow against that, then we're going to treat you as having received the cash today because you functionally did. You borrowed against it. Now, normally, how do the rich avoid taxes? And you read about the screeds in the press that they hate this. The Bezos, he has the stock, he doesn't ever show income, he has carryover losses. How come he's rich? Well, because his stock is worth so much. Even though he hasn't shown income, his stock is worth so much, he borrows on it. And that's a classic strategy. Well, in this case, with an installment sale, so I sold you the business, you're paying me interest, you pay me in 30 years, there's a special code section that says if I borrow on that asset, then I'm going to be taxed as if you had paid me cash. But that was very poorly written, very poor draftsmanship. It left a lot of holes open. So if it's called a monetized installment sale, there's an installment sale, you're paying me on installments, interest only, big lump at the end, and I'm monetizing it by borrowing. And the way it's structured, without going into horrific detail that would make people have forehead bruises and hit the table, is there were ways around that. But now I think the IRS has tightened up enough. They came up with a few good arguments within the last, I'd say, 3 to 4 years. They also put it on their dirty dozen list, so they're very aware of it and they're going after it. And so my perception has changed over time. Initially, I thought, okay, it's clever. I don't think it's going to fly. But then I saw some case law that was not even in that field. It was not directly related. It had to do with Roth IRAs, where the code literally said this, and it made no sense. And several courts, 3 appellate courts, which are very high level, just below the Supreme Court, 3 of them said, yeah, that's what the law says. We don't care if it makes sense. In this case, the nonsense helped the taxpayer. And so the IRS is screaming, this was not the intent. That was not the intent of the law. This is not right. And the court just told the IRS, go talk to Congress. Tell them to rewrite the law. And we look for that. We look for where it was written in a way that gives us an edge. Here, what happened was the IRS came up with some new arguments. They finally took the time to dig in and look at it. And so the landscape changed on us. And that's what we're always researching, always finger on the pulse. Is the landscape change helping us? Is it hurting us? Right down to what kind of judges. I follow which circuit, which is where a tax court appeal goes. It's right below the Supreme Court. Which judges were there? Who appointed them? What's their judicial philosophy? Are they going to be literalists, which is what I want? Or are they going to go with the spirit of things, which is not what I want? And so that's one where we've backed off. I used to be in favor of monetized installment sales. I think the IRS is more likely than not going to win those arguments when they finally go to court. And because it's on their dirty dozen list, that tells me they're very aware and they're looking at it. So we're constantly monitoring events.
Yeah, and that makes sense. And you see that happen a lot when there's like a reactive state from the IRS when they put out these like wanky tax codes like the ERC and other things like that are not well written, right? And are subject to certain levels of judgment. And people they play the game when you can. And then once it gets on that list and things get perceived differently and there's case law, then you make another decision and reanalyze it because now you have subject matter, you have data you have feedback from the courts and everything to make decisions based off of that. You could change the trajectory of the route that you want to go in. So that makes sense. So that's all things that we are continuously taking into consideration. That's why with building out the firm, when we discussed how to build it out, it was so important to make sure that we weren't just a traditional accounting firm with just having like a traditional accounting staff. We didn't want to be like an H&R Block. We want to have these high-level thinkers, these challengers that are here with us, that are going to strategize, that are going to not accept yes for every answer, not accept no for every answer. They're going to look for maybe we could do it if next, right? And that's important, I think, for us. And that's where you come in for definitely with training and all of that, to just get them to understand the 30 years that you've put in for time.
This is wonderful because what you have allowed me to do, and I've always done it to a much higher degree than most. I structured my practice around it. But this is really allowing me to do, being part of Checkmate, is to be the crazy professor. I get to dedicate my time to research. And it's not just books, although there's a lot of that. The code and the cases are a big part of it. I will actually go, it used to be to the tax court building in DC, where there was the only place you could get this. Because when there's a case, it's a decision, maybe this thick. It's just the decision. But if you've ever been in a lawsuit, there's a gathering of evidence, shopping carts full of cross-examination and evidence and tax returns and depositions and the letters, the IRS briefs. What arguments did they make that never made it to the decision? I want to know the arguments they're making that are largely not public unless you know where to dig. I want to know how they think and what they're arguing. And also, there's so much that's just lore. I'll give you an example. One of our favorite strategies is a rollover business startup, Rob's. They're very gray. You can Google. Most of what you did is wrong. Well, it's TMI.
Yeah.
Part of the problem with the internet is TMI. For example, Rob's are very much in a franchise context. They're traditional, they're non-self-directed, which is all mistaken. It's a terrible way to do things. But if you ask AI, what does it gear on? Not quality, but quantity. And so the search engines just go for what's out there. And so you're not really going to find the great strategies unless you already know the answer, which of course, why are you going to Google if you already know the answer?
Right.
So that is a thing. For example, I know a guy, because there's no case law, not a single case on this structure, which is good. IRS hasn't gone after it. There's plenty of gray and reasonable gray, where reasonable minds can differ, where I don't feel like I'm being really at all inappropriately aggressive. It's simply my job as a lawyer is to maximize for my client. That's to whom I owe a duty. I have two duties. Keep them out of prison. I don't want to go to prison. I don't want to lose my license. There are lines. We don't cross them, period. And sometimes that's not pleasant. People get displeased sometimes when we tell them those things. And of course, the fun side is, all right, if the law is gray, in whose favor will I interpret it? Well, the IRS isn't my client. And so some of the research is lore. I know a person who has been in over 100 Rob's audits. I don't think there's anyone else in the country like him. And he's very good at that. There are a few other things I'm good at that really, when I talk to him, he's like, wait, you can do this? So we had a great interchange. We were both very curious and we both knew things the other didn't. But what's in his head is not written anywhere. And the ability to just find guys like that, pay them what they want, have a discussion, and learn about the techniques that are not even written anywhere.
Yeah.
That's what the 1% does.
Yeah, and it reminds me so much of just like the story of the general practitioner. So like if you're sick, you're not feeling well, who's the first person you go to for your doctor, right? You go to a general practitioner. And then you say, okay, well, maybe my arm hurts or whatever it is in addition to that. And now you have to go to a specialist, right? You go to an orthopedic or whatever it is. When you get into the lane of specialist, right? The general practitioner is your traditional accountant, attorney, whoever it is, your general practice. But then to really play ball, like to really understand all these strategy things and the people like you that have these mad genius desires and obsessions that you want to just dig and drive, and you enjoy challenging the code, and most people don't. we were speaking prior, and you mentioned that the accounting industry is in a crisis right now. Can you talk more about what that means?
Sure. I see an article about every month in the Wall Street Journal about how, first of all, young people are not getting in the industry. And it's true. If you look at tax graduates, accounting graduates, CPAs, people coming into the industry, there are fewer coming into it. And a separate conversation would be why that is and so forth. But it is an established fact. It is a pattern. Older people are starting to retire or to downsize, which is a natural later in life thing to do. And finally, this distinction you discussed between preparer and planner, and there are a lot of gradations again in there. It's gotten worse because preparing returns has gotten harder. So we've always had this issue of the preparers tend to look in the rearview mirror, which is a funky way to drive. We want someone looking ahead and in the mirror. We've always had that issue. What I have found is over the last 8 years, it's gotten worse because preparing returns, in credit to the preparers, there's a reason for things being the way they are. Preparing returns has gotten harder. The Trump tax law from late 2017 both improved from a small business standpoint and gave a lot of opportunities, but also complicated the returns greatly. And so preparing returns has gotten a lot harder. Throw in that the IRS changed during COVID, not for the better, and that they're in a sort of crisis of their own. Preparing returns, dealing with the IRS has gotten a lot harder. A lot of the accountants who do that really want to research. They really want to know more. They just don't have the bandwidth. Reality is changing what they're able to do. And so we're seeing the chasm between planning and preparing widen. And so having that integrated and together as one is even more valuable now than ever because it's excessively rare. We're losing accounting, I use the term generally, really tax is probably the better word, tax personnel at all levels in absolute numbers. As the complexity grows, the population grows, the number of businesses grows, the demand grows. We actually have less supply. That is a fact. And second, the divergence in quality and the hardening of people being in their lane, especially the preparers who would love to research but can't. Being able to integrate that, finding that integrated, is increasingly rare. That is something the 1% do. That is definitely integrating those functions, making sure, because I, as a crazy mad scientist, I still quiz and get involved and review, how does this actually function day to day? That's why I like to still take tax court cases. I want that feel of what happens with an IRS lawyer. What do they want to go after? What do they not want to go after? And
sleeves rolled.
That art and that feel is very difficult to write or find in written format. Likewise, what the accountants are seeing when they prepare the returns, there is, believe it or not, people think it's just, just fill in the numbers. Oh, no. There's so much judgment and nuance and even just, for example, badly worded questions on the forms. What do we do with that? And so again, that feel of talking to all the team members, all the players doing their role, and having someone that's the glue that puts it all together, because it's not just that you have to have those different aspects, which a lot of people lack. A lot of people, for example, just have an accountant, maybe some minor planning, but mostly compliance, return oriented. The glue that puts that all together and can integrate that. And that's my goal. So in addition to mad scientist, I think I should like to be referred to as the glue that can put this all together. And that's my goal.
That's a good terminology for you. And your Halloween, next Halloween, we'll make sure we get you a mad scientist outfit, because that will definitely be...
And I'll walk around with model glue and act like I used it.
Yes, and a bottle of glue. We got it. Custom. So if you're looking to get started and you're listening in and you're an entrepreneur, an investor, or someone in the industry that just wants to make a fundamental change to take the next steps to level up your life, definitely make sure you take action with looking at different education that's available to you, finding a strategist for sure as a first step, get a consultation, see if they're a fit, have these conversations, talk about where you want to be in the next year, where you want to be in the next few years, and where you want to be in your future for retirement if that's further down the road. Making sure you have the right people around you as advisors that can guide you and trust and truly understand to the core where you want to be, and your goal and your mission is extremely important and impactful to that process for you yourself. So If you want to find out more about us, we're at checkmatetaxadvisors.com. That's checkmatetaxadvisors.com. You can sign up there for our newsletter or get on the wait list as well. We are taking on clients on a rolling cohort right now. We only take on as much as we can handle to make sure that we could service everybody in the best format that we can and provide the most value that we can to all of our clients. So thank you, John, for joining me today.
Pleasure. Thank you.
Look forward to doing it again.
Cheers.
Cheers.